Hello and greetings everyone. I hope everybody's having a fantastic day today. Today we're going to touch on a very interesting article, and this is something we as an ecosystem have always been talking about, and it's been our mantra, and these are fundamentals. When it really counts, fundamentals will always win. As the title already gave it away, let's get to the article. It's about Ethereum's fundamental supply outlook being better than that of Bitcoin. This is an article that we want to dissect and look at properly. What actually makes Ethereum's fundamental supply outlook better than that of Bitcoin? Ethereum's fundamentals look more constructive than Bitcoin's, owing to the deflationary trend of Ethereum's supply. I'm so excited that the world is waking up in understanding the importance of deflationary supply, and fundamentals are key. And it's the only layer 1 blockchain that is actually doing this. And we'll get into details. Let's dissect this article. Ethereum, the second largest cryptocurrency by market value, has outpaced Bitcoin's rally over the past week. A trend that could continue because the fundamentals of Ethereum's native token appear more favorable than those of the larger crypto. So now the focus could soon shift to the significant drop in ETH supply, because since Ethereum transitioned to proof of stake back in September 2022, due to the upgrade that was dubbed the merge, this causes Ethereum to be deflationary, in contrast with Bitcoin's halving, which just slows the cryptocurrency's inflation rate. Everyone is talking about the Bitcoin halving in April, but that's nothing compared to the active reduction in ETH supply. It's because the reduction represents a deflationary trend stemming from Ethereum's banning a portion of transaction fees. So Ethereum has transaction fees, and part of that is being used to ban the supply. So the merger replaced miners with validators, removing a significant chunk of the Ethereum supply from the market. To be a validator, you have to stake a minimum of 32 ETH. This is to secure the blockchain, and in return, you get Ethereum rewards. And so far, the number of Ethereum staked or locked in the network have surpassed 30.1 million, or 25% of the total circulating supply. In addition, we are anticipating that the SEC, the Securities and Exchange Commission, will greenlight the SPOT Ethereum ETFs in the US later this year. And big players such as Franklin, Templeton, BlackRock, Fidelity, ARK, and 21 Shares, basically the same players that already got the green light for Bitcoin SPOT ETF, have now also submitted applications for Ethereum SPOT ETF. Now, the big deal here is that combine this Ethereum supply ban with dormant staked ETH, and then mix in the SPOT ETF actively putting Ethereum into cold storage. All of a sudden, the supply story for Ethereum is as bullish as fundamentals can get. This is a powerful statement, and this literally sets Ethereum apart from every other layer 1 blockchain. I know of another ecosystem, another cryptocurrency, that actually has a stronger supply story that is more bullish as fundamentals can get. Let's answer these two questions first. Ethereum has outshone Bitcoin in the past 7 days. Let's understand how Ethereum did that. See, Ethereum has an unlimited supply. That's the first thing. However, because Ethereum is directly tying its volume to its burning mechanism, you can see what that does to the price automatically. This is because Ethereum is burning a portion of transaction fees. So Ethereum is also charging transaction fees. Part of those fees go towards burning more Ethereum. And this is why you see if you tie your volume directly to burning, and this is what you get. So if we come here and we read Ethereum has outshone Bitcoin in the past 7 days, and now let's look at what happened in the last 7 days. The last 7 days, Ethereum has an unlimited supply, like we already said, and it's issuing right below 900,000 ETH annually. Currently, it's burning right above 1100 ETH. So this puts ETH at a negative, so it's deflationary. The supply change is negative, and this only happens because Ethereum is tying its volume directly to its burning mechanism. And when you do that, this is exactly what happens. Now keep that in mind. If we want to answer the second question is, okay, Ethereum's fundamental look more constructive than Bitcoin's. And this is owing to the deflationary trend of supply. And this is because Ethereum transitioned to proof of stake back in September 2022. So we've not seen Ethereum go through a bull market as a proof of stake consensus. And Also, we haven't seen Ethereum go through a bull market tying its volume directly to a burning mechanism. During this bull run, a lot of changes will happen because people will realize the importance of deflationary tokens and tying your volume directly to the deflationary mechanism that you have. This is the reason why Ethereum has been outshining Bitcoin in the past 7 days, and also how the deflationary trends have been and why that happened. So now that we've established this basis, let's now look at this statement that the supply story for Ethereum is as bullish as fundamentals can get. Ethereum for me is the #1 layer 1 blockchain with the strongest fundamentals in the space. And we took inspiration from Ethereum and we learned from them. And we took their supply story to the next level. This is why I disagree with this statement that Ethereum has the most bullish supply story as fundamentals can get, because Bullrun has even a more bullish supply story as fundamentals can get. First off, to begin with, unlike Ethereum, Bullrun has a limited supply of 1 million tokens. We saw that Ethereum has an unlimited supply. With that said, our burning mechanism doesn't just remove tokens from circulation, but actually it removes tokens from total supply. And this is how. Like I said, we started with 1 million tokens in total supply. Now we are down to 972,000 tokens. And we have a limited supply that keeps decreasing. So we are a scarce token. And this is the major difference between us and Ethereum, is that unlike Ethereum having an unlimited supply, we actually have a limited supply that keeps decreasing. And this supply is directly tied to the transactions, just like with Ethereum. So the higher the usage, the more burns will happen. This is one thing we have in common. We are tying our burning mechanism directly with the volume, just like Ethereum is doing. If you pay attention, the higher the Ethereum volume, the more they're burning. You see here, the higher the volume, the more it's negative. The supply becomes negative, so it becomes deflationary. And this is directly in correlation with its price. So now that we've covered the reduction in supply for Ethereum, let's look at also the number of staked Ethereum that is staked and locked away from circulating supply has reached over 25%. So staking of Ethereum plays a major role as well, because Ethereum is locking away its token from the total circulating supply. This plays a major role as well. So the combination of locking away your 25% of your total circulating supply through staking and having a deflationary mechanism that is actually burning a portion of transaction fees, these two combinations is the one causing Ethereum's chart to look like this. And it's the first time seeing Ethereum in full swing since it transitioned from proof of work to proof of stake. Now that we've answered that, let's look at Bullrun. Bullrun also has a staking platform. And unlike Ethereum locking away 25% of its total circulating supply, Bullrun has locked away over 58% of its total supply. Another aspect that we need to pay attention to is once you staked your Ethereum, they issue more Ethereum. In contrast with Bullrun, we are actually giving out USDC distributions for those who are staking. That makes us a very scarce token because we are actually not inflating the market with more native tokens. And like we saw here, Ethereum is tying its volume directly to its deflationary mechanism, and it's working in full effect. Bullrun ecosystem, however, doesn't just tie the deflationary aspect of it to the trading volume. It ties liquidity and USDC incentives also directly to the volume. And if we look at Ethereum here, this volume to market cap is an indicator of liquidity. The higher the ratio, the more liquid the cryptocurrency is. We see here it's a very low ratio. So this indicates that Ethereum is also struggling like every other cryptocurrency out here with liquidity. So they're not focusing on retaining liquidity. And this is what we are addressing here as well with liquidity. We're putting half of the buy and sell taxes, which are 6% on the buy and the sell side. 3% of that goes towards retaining liquidity. We are addressing the liquidity aspect of that as well. And this is also directly tied to the volume. If we go back to the USDC distributions, let's look at our staking platform. Our staking platform accumulates USDC distributions like we said, and these are handed out to the stakers. Instead of giving out more BRL tokens, we're giving out USDC distributions for those who decide to stake. So if we come back to this statement that the supply story for Ethereum is as bullish as fundamentals can get, we wanted to highlight that there is a better storyline that has a more bullish supply story in this space, and that is better than Ethereum, and this is Bullrun. Bullrun has even a stronger supply story, as strong as fundamentals can get. First of all, it has a limited supply of 1 million tokens. Its banning mechanism removes tokens from the total supply, not just out of circulation. Its staking distributions are in USDC. The supply is not unlimited, it's scarce. And the most important thing here, the volume is directly tied to the deflationary mechanism with Ethereum, but with Bullrun, it's not just tied to the deflationary mechanism, it's also directly tied to retaining liquidity and the USDC distributions. So it took it to the next step. And finally, what we want to highlight here is that while the Securities and Exchange Commission is still expected to greenlight spot Ethereum ETFs in the US later this year, we don't have to wait for a centralized entity to give us a green light. At Bullrun, we already put 10% aside to be staked in a cold storage. So what this does is that because we are staking 10% of our total supply, we'll receive staking distributions in USDC. What we do with this is we'll do buybacks. These buybacks accomplish adding liquidity into the liquidity pool. At the same time, it allows us to restake the BRL we purchased from the open market and keep them in the cold storage, never to see the daylight again. So instead of waiting for ETFs and institutions to come in and purchase Ethereum, we already have an internal cold storage dedicated to just keep doing buybacks and restaking BRL tokens, keeping them in a cold storage, never to see the daylight. So this is what sets us really apart. Ethereum is the best layer 1 blockchain. Its only flaw is the high gas fees, but I'm sure they'll be working on that and they'll fix it. It literally has the best supply story, and it has the strongest fundamentals as fundamentals can get as far as layer 1 blockchains. If it comes to ecosystems, to tokens, the only competitor that has stronger fundamentals and tokenomics than Ethereum is Bullrun. The transactions are directly tied towards retaining liquidity, burning tokens, and receiving USDC distributions, and not just on burning tokens like Ethereum is. And like we said, we don't have to wait for the SEC to give us green light so that these large financial institutions can come in and purchase. We already have that going for us. This in turn makes our token even more scarce. Tucking away BRL supply in cold storage, locking away over 58% of the total supply through staking, and decreasing the total supply over time. These three mechanisms combined have a much more effective result than what Ethereum is currently displaying right now. So Ethereum is actually showcasing what a deflationary token looks like, which has a 25% of its supply locked away from the circulating supply. This is what the video is about, to just highlight how strong fundamentals are shown during the bull run. So strong fundamentals will show and are showing on Ethereum side heavily. This is why we saw here the last 7 days Ethereum has been outshining Bitcoin, and this is the reason why. Its volume is directly tied towards its burning mechanism, and it's been burning more tokens than it's been issuing, and this has a positive effect on its performance right here. So with this said, I just wanted to highlight the importance of strong fundamentals, the importance of tying your trading volume directly, not just to burning, but also to retaining liquidity and to issuing USDC distributions, and not only having a total supply but having a scarce supply as well. That combined with a staking platform that locks out over 58% of your supply, and in addition it also puts aside 10% of BRL that is being staked and keeps locking away more BRL tokens in the cold storage, never to be seen. These three combinations will show a better effect on the market, on the chart, than Ethereum is. And this is how we argue our case that there is a better supply story that is bullish as fundamentals can get. And this is what the video is about. Not knocking off Ethereum. I'm a big Ethereum maxi. I love the fundamentals of Ethereum. As a matter of fact, we took from this strategy and we just enhanced it and didn't just restrict the volume being tied down to its supply. And unlike Ethereum just focused on the deflationary aspect of burning a portion from the transaction fees, and they're focusing on deflation alone, we took it a step further and focused on retaining liquidity and also the incentives in USDC. We tied all these three aspects directly to the volume. With that said, community, this is it for today. I hope this video was informational, educational, and inspirational to you all. I want to wish everybody a wonderful rest of the day, and let's keep in touch.